You are listening to chartingwealth.com for Wednesday, the 5th of October, 2016. Let's jump right into this market that is going down. Gold particularly down hard. The total market down 0.52% for the day, continuing to parallel the down move in the weekly chart. We see the two-day chart is moving down. And if we look intraday, what do we see going on? Well, the market had gone down on the 3rd, opened up really in the morning. It was pretty much a doji. That means that the bulls and the bears pretty much paralleled each other in decision, but in the afternoon, the market rocketed down. In fact, it was down, gosh, it looks like over twice what it ended up going down. It recovered somewhat. The bulls were able to pull the market up some. We did have a crossover, of course, in the morning going down on the total market. So those of you looking to get into inverse funds, make some money on a down move, that did trigger in the morning on the big chart. And, well, I say the big chart, IYY, the total market. And, of course, derivative oscillator flipped over in the afternoon. Now, if we go from IYY and take a look at the S&P 500, down 0.51%. Again, total market down 0.52%. What do we see going on? Well, we redrew our two-day trend line. We've been in a downtrend on the two-day chart since the 24th of August. The weekly chart is also down. We are down on the two-day chart, closed still a little above the down trend line on the weekly chart, but we're still in down territory. Derivative oscillator still losing its downward energy. However, the market did kink over on the MACD and has now started moving down again where it was paralleling previously. If we look intraday, what do we see going on? Well, those of you looking to jump in, you would have jumped in the afternoon, and hopefully you've been writing this down as we see the market going below and closing below the two-day trend line. And as far as the 4-hour chart goes, it managed to move below the weekly trend line also. So hopefully those of you looking for a down move that didn't already use your Heiken Ashi candlesticks after the up move on the 30th in the morning and afternoon, jumped in on Monday the 3rd. It has continued to trundle down pretty strongly. Again, strong down moves in the market. Now let's go back to the two-day chart. I'm going to take a look at the Qs. If you recall, the Qs has continued to move up. In fact, the weekly chart, unlike our other two indexes, is in a confirmed up move and has been for quite a while. Two-day chart crossed over going down back on the 26th of August and has had some ups starting on the 15th, but it's never been powerful enough. That's 15th of September. Never been powerful enough to move through the MACD, although we did see over the course of the last two-day candle, the first day of that two-day candle on the 4th, we've seen the derivative oscillator flip over, but the MACD rotated to moving down again. Very interesting. You're wondering what's holding up the Qs. Part of the issue in the Qs, the NASDAQ 100, is it hit a high back on the 23rd of September, and it's just now made it back to that high again. So basically, the market was slipping sideways, edging ever up, but not enough energy to flip that MACD over. Now, if we look at the 4-hour chart, what do we see? Well, still in a confirmed down move. Market was up in the morning, then down in the afternoon, down 0.15%. So again, barely down at the end of the day, but again, still down. 4-hour chart has crossed over going down. So again, the down move to have hopped in the Q sometime around the 3rd. You may have jumped in again. We have warned you the problem with the Qs is that you're still in an uptrend on the weekly chart, and all things being equal, the market tends to move in the direction of the biggest chart, and for us, that is the weekly chart. Now, lastly, let's go back to the two-day chart. Take a look at gold. Whoa! We have a huge, as Donald Trump would say, huge down candle. A gigantic down candle for just the first day of the two-day candle on the 4th of October. Gold down 3.5%. 4.47%. Those of you who have been using our charts for gold in an inverse gold fund have been doing great shorting gold. We crossed over going down back on the 8th of August, but the real tale is not in our 2-day chart, but it is in that 4-hour chart that has been working as a trading chart for the last several weeks. Those of you who jumped in back on the 28th of September, what have you seen happen? Well, the low was 125.73. Where is gold at the close of the day on the 4th of October? 121. Now that is a nice chunk of down movement you could have jumped into. Again, if you haven't listened to our training on inverse funds, how to make money when markets crash, you need to do that. It's available at the website and at iTunes and at YouTube. Thank you so much for listening to us. You have questions, problems, concerns. We love to hear from you. To get up with us, just go to chartingwealth.com. Also follow us on Facebook, Twitter, Instagram, YouTube, you name it, we are there. Please go to our YouTube channel and subscribe. You'll be the first to get all our new trainings when they come out, and it's the first place we upload all of our new reviews. Now, lastly, we do ask if you want to help us out and you appreciate what we do for free for you every day with our training, please go to iTunes, give us a 5-star rating, say something nice about us, subscribe to us there at iTunes. It helps us with our metrics. Also, subscribe to our channel on YouTube. Thank you so much. God bless you. We love to hear from you. Let us know what else we can do for you. If you've not already listened to our how to use your daily market worksheet, please, by all means, listen to that. We're very proud of that training. We've gotten lots of compliments from folks on it. If you want to supercharge your training with how to read these charts and learn how to read them as fast as is humanly possible and get good, you need to fill out that daily market worksheet every day. It works like a charm. Thanks again so much. Take care from chartingwealth.com.